Hey, urgent alert traders, and also all traders and investors from Traders Pub. My name is Matthew Buckley. My call sign is Whiz. I'm the founder and CEO here at Top Gun Options, and I also manage 4 of the model portfolios here. This video is going to cover our urgent alert portfolio. I'm going to put a new trade on the S&P 500, and I'm also going to review the current positions. A lot going on, man. This Trump rally, is it going to continue? Is it going to fade? The answer, obviously, as many of my current members know, is yes. It's going to fade a little bit, and then it's going to keep on rallying. As I covered in my sit rep this morning, and for those from you from Traders Pub, make sure you go to go.topgunoptions.com/sitrep. That's SITREP. I shoot a daily video, 10 to 15 minute video, and it is free. You don't have to come to our website. It'll get pushed to you whenever I post it. Sometimes I do it before market open, after close, middle of the day, whenever. Just put your name and email, and this will get pushed to you every day. But I covered this in my daily brief today. The stock market isn't worrying me right now. It's solid fundamentals. We nailed the Brexit with the volatility trade, the Fed meeting here. We were one of the few in the financial industry who both predicted a Trump election and a market rally. Citigroup, Goldman Sachs, all predicting a Clinton win and a market implosion if Trump won. All wrong, and our portfolios absolutely crushed. We had a record year, the best year in 2016, and we're going into our 7th year. So, folks, we've nailed all of this. And the same losers who said if Trump wins, market goes to zero, said sell the inauguration, and that didn't happen. Tax reform, getting rid of Franken-Dodd, reducing regulation, getting rid of 20% of the government workforce, the overhead. Man, you could not be more bullish on this. And our financial positions that I'll review, especially in this portfolio, JP Morgan, are just absolutely printing money, folks. So we will take a little bit of a breather here, excuse me, but that's good. Just like after the rip your face off after the election, we took a little bit of a breather, and then the next leg up. We're going to take a little bit of a breather here. But there's no huge macroeconomic catalyst to pull this market down. Okay, Wiz, you kind of sounded a little foreboding, I guess the word is. This is what's freaking me out, man. The deep state, whatever the hell you want to call it, the tinfoil hat wearing guy on the exit ramp of I-95 saying the end is near, or the deep. This is creepy, folks. This is the stuff from Banana Republics, the potential inside coups, or this intelligence community taking sniper shots at the president or the decision makers in this country. This should creep you the hell out, and the market is going to wake up to this eventually, and that's the thing that's going to really keep me up at night. But I'll, like I said, sign up for our free sit rep. And I'll tell you how to take a 2-week trial test flight for our Trader Pub friends to, see what we do here. But I got to get going for my members. I just thought I'd add you guys in here from Traders Pub so you can see it. Quick debrief, folks. I didn't get filled on this bull put spread that I sent out on Thursday. I'm shooting this on Tuesday, February 16th. I sent out this trade on Thursday, a bull put spread to 2280, 2285. As soon as I saw Trump say, hey, in 2 to 3 weeks, we're going to have a huge announcement on tax reform. I sent this alert out at $1.25. I didn't get filled. A lot of you did. It's down to 40 cents right now. So let's do political science math right now. $1.25 minus 40 cents equals times 15 contracts, $1,300, folks. Many of my members are up $1,300 in 3 days, 4 days. Anybody like that percentage return? I think that's about a 75% return on that trade in 4 days. $1,300. I would close that. My SOP, standard operating procedures to my members, is with a credit spread. If I see a 7, 8, or a 9 in front of my percentage gain, 70, 80, 90%, get out of the trade, okay? It could turn into, when he does announce this huge tax reform, a little bit of a sell on the news. Did we pull forward the potential tax announcement rally? We might have, okay? But take the profits now, close it. So there's a perfect example of a great winning trade that we potentially could close out in 4 days for a $1,300 gain. Okay, current positions. Disney, man, this one's crushing it. Up $4,300. Let me show you the trade, exactly what it is for my existing members. I'm short 10 of the March 3rd 112 calls, and I'm long 10 of the Jan 18 70 calls, and I bought what I call disaster puts at 80. This tactic, it's not a strategy, folks. There's no such thing as an options strategy. Well, a long call diagonal is a strategy, Whiz. No, it isn't. A financial strategy is saving for college, short-term income generation, risk management, buying a boat in 6 months. Those are strategies, folks. Tactics support a strategy, and this long call diagonal tactic is awesome. What I do is I sell front month, February, March, April, those are called the front month, upside calls against what were initially deep in the money 80 delta calls. Right now, these 70 calls are probably 1 delta calls, which means they're printing money. If Disney goes up $1, this position goes up $1. And I bought disaster puts in case what? There's a disaster. So we're always hedged. So like I said, Disney is has been a great trade. What do we up? So year-to-date marking in. But I missed this, and here's what I'm going to tell you. Look at the 6-month chart of Disney here. Looks great, Whiz. Wow, you were right. Well, folks, I got into it right around here. As it started to do this slide for life, ESPN albatross around its neck, some other potential succession issues, but now, who is it? Iger, the skipper said, hey, if we can't find anybody, I'd be honored to stay another year. Very bullish news. So I'm not that guy at a cocktail party that said, oh yeah, I got into Disney right down here. I didn't. As it started its slide, I'm like, hey man, it's like a Captain Kirk trade. You boldly go where nobody else is going. Disney ain't going out of business. I live down here in Florida. You have to sell your first kid to get into the park nowadays. Their Star Wars properties are out of control. The movies are doing great. Look at that trajectory, man. And I think it's just going to keep going as the economy gets better. Jobs are getting better. People feel more, confident, have discretionary income to spend. They're going to Disney. With my 3 kids, I should be a shareholder of Disney, but I love this trade for current traders, and I'd like it as a new one. And if you take your 2-week trial, I'll show you how to do a long call diagonal with a protective put. Just don't have time in this video. So for current members, I'm going to keep those 112 calls. Trade's looking great. FXI. This is China, folks. I am very, very, very long-term bullish on China. Well, Wiz, there's a lot of warts on that trade. There is. Potential trade war with China, right? Trump, initially fired some broadsides at them. They fired back. They pulled up to one of our naval ships about a month ago as we were pulling up one of our drones, just doing seawater tests, and took it. Things might go bump in the night. Their fighters are once again flying close to our EP-3 or our surveillance aircraft. Last time they did that under George Bush, guy got too close to a prop, and aviation's a self-cleaning oven, and he's dead. And that aircraft had to make an emergency landing on a Chinese island. So there are potential pitfalls to being long-term bullish on China. But I got to tell you, folks, Trump is a negotiator. He'll tell you. He comes in with his broadside opening position. A good negotiator doesn't come in the middle and then have to move all the way in the other direction. No. So potential trade war. There are risks to the trade. I think it will be worked out. It's the world's second largest economy. They own us. They're tied for first with Japan as the number one foreign holder of U.S. debt. So if you can't be bullish on your banker, who are you bullish on? So I have 2 trades on right now. One is up $2,900. It's out to Jan 18. I would love, and I will put on a new Jan 19 trade, and I did in one of my other portfolios. This will be a long call diagonal. I'm long 15 of the Jan 18 25 puts and long the 26 calls. Okay, so I need some front month upside calls to sell to bring in some premium each week. So with these long call diagonals, we make money in 2 ways. With the underlying going up and selling front month calls to bring in a little scratch. So this trade, and I'm kind of drag racing these 2 trades. Check this out. One's up $2,900 and this one is up $5,000. One is up 17% and one is up 296%. Isn't that incredible? What's the difference? This one is called synthetic stock. Okay, with synthetic stock, all you need to know is I don't have to buy shares. Folks, if you're buying shares, no offense, you're a chump. Why buy the cow when you can milk it for free? Use options to create the same position as stock. The term synthetic means this. You don't get to vote since you're not a shareholder, and who cares? Whenever I was a shareholder ages ago in a company and got some proxy this or vote for that, it went right into recycling. Carl Icahn's got your more votes than you anyway, right? And it also means you don't get a dividend. So if you're an investor or trader looking at dividend type of plays, maybe you don't do synthetic stock. But a synthetic stock position has a one delta. It's one delta, meaning if this goes up $5 today, our position goes up $5. So this one can potentially profit or lose money, of course, faster than a long call diagonal. A long call diagonal will eventually catch up and become a one delta trade, but it's cheaper to get into. That's the benefit of a long call diagonal. Synthetic stock, a little bit more expensive to get into, but you can see profits or losses quicker. Okay, so I created synthetic stock by selling puts, which means I'm bullish, and buying calls, which means I'm bullish, at the same expiration and same strike. And I put disaster puts at 26. Okay, so I have 10 of those and 15 of those. So let's take a look at a chart of the FXI, and let's sell 25 upside calls, right? 10 and 15. So here's the election, right? Everybody bullish, let me go through months, on Trump, and then we fire some broadsides, trade war, blah, blah, blah. Uh-oh, that's bad. Look at the recovery of the FXI, and if you don't know, FXI is the iShares large cap China ETF. Look at that run, and I think it has more to go. I think it's getting a little hypoxic here, maybe running out of some airspeed. So I'm going to go and sell some front month upside calls, go out a couple weeks to maybe the 39.5s. I think this runs a little much, kind of like the S&P 500. And let's take a look. Go out a couple weeks, FXI, and we'll look at. I like March 3rd, and I set to 39.5s. So I'm going to sell 25 because remember, I had 15 contracts in one and 10 in another. That's 25. Okay, and I'm bringing in potentially over the next couple weeks. Let's go mid-market and fire about $550 over the next 2 weeks. Isn't this great? Like every week or every couple weeks or every month, we're bringing in this premium, hopefully as the underlying's going up. So for those folks at the cocktail party Friday night who said, well, I bought some shares in the FXI ETF, I think China's going up, they're doing the buy, hope, and pray method. They bought some shares, they're praying it goes up where they hope. You, even if the FXI starts going down a little bit or levels off, we still bring in coin doing this. So I'm going to fire those off right there and then move on to our next position in the urgent alert model portfolio. Check this out, man. JP Morgan. Again, before the election, folks, I said get long the financials. Not only is Trump going to win, the financials are going to have a rip your face off rally. Who's better for Wall Street? Hillary Clinton or the guy that lives 2 blocks from Wall Street, who's in the real estate industry, very pro Wall Street? His Treasury Secretary I've had dinner with, Steve Mnuchin, and he ran Dune Capital with my sister, Kia Buckley, and also Khan. Folks, this was a layup trade. If you sat in front of your TV watching Comedy Central, which I call CNBC, and listened to them that the market would implode if Trump wins and all sorts of stuff, you missed all this stuff. We nailed it. Look at this trade on JP Morgan. I've had this trade on for about 8 months. It's up $27,500 on 10 contracts. We have members in my other portfolio. A Goldman Sachs trade put on in September with 20 contracts is up $135,000. I did 5 contracts, but some of my members, I have their testimonials, can show you to them, up 6 digits. Incredible. So this trade has averaged for me in this portfolio a $3,000 a month return. Give me a hell yeah if you'd like to make $3,000 a month. And JP Morgan still has room to run. This trade I put on in December. It's up $7,600. Okay, allow me to round up to 8. 2 months. This one's averaging a $4,000 a month return. And don't sit there going, oh, well, Whiz, I missed out on these. You didn't. I'm telling. Look at this. After the rip your face off yay rally, we've leveled off for a couple months. Kept selling calls, upside calls, and bringing in premium, and now we're ready for liftoff again. When they gut Frank and Dodd, when they lower tax rates, folks, all this is going to go to the bottom line. I worked at a financial firm in Chicago. There's an entire department or floor of people dedicated to compliance and rules and everything. I get rules, but they need to be smart. Once this yoke is lifted off and Janet starts raising interest rates, financials are going to have another liftoff, period. You haven't missed out on anything. Take the 2-week trial I'm going to tell you about at the end of this, and we'd be good to go. So I have 2 positions, a total of 20 contracts. Let's take a look at the chart. So again, little bit of a nice pop. We're going to get airborne again. The S&P trade I'm going to cover here in a little bit. I think same thing. A little bit of a cool off before the next leg up. So let's go out a couple weeks and maybe take a look at the 92s. Let's go out to that March 3rd again and take a look at the the 92s. My options change populates here. And I'm going to show you in a couple minutes, folks, a new trade. I'm going to take a look at the S&P 500. Okay, we're going to get some options pricing here. So sell 20 of the March 3rd 92.5s. And okay, we're not getting populated here. Sometimes if I go out of the positions here, I like using Options House, folks, which is now E-Trade. And of course, the options prices just popped up because I helped build it. I helped build Options House when I was the managing director of Peak 6 Investments, one of the largest equity options vol arb firms in the world. Had a blast. Let's do the 92.5s. I'm going to sell. And I have a rule of thumb for selling front month upside calls, folks. When you do your test flight, you'll learn what that is. So in the next 2.5 weeks, I could potentially make nearly $1,000 selling front month upside calls on JP Morgan. Okay, all it has to do is finish below 92 by March 3rd. Okay, it's got room to run up a little bit, so where I can make money as it runs up a little bit, and I could potentially make $1,000. Love it. Done. Very good stuff going on here at TGO, folks. A lot of miserable people out there because they missed this rally. Now VXX, a bullish double vertical on VXX. Wow, it's down $3,800. I don't care. Oh, whoa, Whiz, you had me until that. This is a hedge. Other ones are trades. I want to make money on a trade. I don't care if I lose money on a hedge. And I even hate saying that. It makes my skin crawl because I don't lose money on a hedge. I don't sit here at this kitchen table and go, God, I lost so much money this month on paying that USAA auto, home, and life insurance bill. Is that how you think? Not until you get wrapped around a tree, right? And you go, thank God I had insurance, or God forbid something happens to you. And, well, you won't know about it, but your loved ones are like, okay, getting thrown out of their house because you had no life insurance. This helps me sleep better at night. Yeah, it's having a nice little pop today because in the past couple days we've leveled off and volatility spiking. The other day, as a matter of fact, we've seen one of these rare market up, VIX up, something is up. When the market's going up and the VIX is going up, folks, that means traders are like, okay, yeah, I'm into this rally, but excuse me for a second, I'm going to go over here and hedge and buy some cheap vol. That's what that trade is. This one helps me sleep better at night. It's actually time for me to maybe roll that one out and put on a new one. As we go along, something is eventually going to happen, folks, to freak this market out. We can't stay down here at 10, 11, or 12 VIX forever. Whatever it is, and my call sign's Whiz, not Nostradamus. So whatever it is, it's going to cause the market to freak out. Volatility is going to spike, and it's called a bullish double vertical tactic. It's going to print money because it's two spreads on top of each other. Just like it can print money when something spikes, obviously if it's going down, it can lose money as well. So a hedge, it's like the, the Ronco oven or something. Set it and forget it. The final position in here before we get to our new trade is the XLF. It's a basket of financial stocks. I'd rather go with individual financial stocks right now. I told you about the Goldman Sachs trades in one of my other portfolios, the JP Morgan trade in this one. I'll manage this one. It's making money, but if I were capital limited, I'd just deploy into single financial stocks. Hold on, Whiz. Isn't there a risk with just being in a single stock? Of course. But I see individual stock with like Steve's Biotech or something fly by night. Yeah, we did have Bear Stearns and Lehman Brothers, but we now know that can happen, and we can see the dots coming. I don't think Goldman Sachs or when you have 4 people in the administration from Goldman Sachs, 2 in the cabinet and 2 as senior advisors, I think you have a Goldman Sachs put, and he called Jamie Dimon, Trump did, to be his Commerce or Treasury Secretary. And Jamie Dimon said, nah, I'm having fun running JP Morgan. So individual stock risk goes away for me when you got that. Just like we got long ExxonMobil because Rex Tillerson, he was at Exxon for about 45 years, ran the place, and now he's the Secretary of State. You think ExxonMobil's going out of business? The answer is no, folks. I digress. So I'm short 15 of the regular February expiration 24 calls. Look at this. Tomorrow's expiration, they're in the money right now. So this is a perfect example of, oh my God, your short calls are in the money. Let me just cover the other two legs. Long the 17 puts and 18 calls. Long call diagonal. What am I doing right now? I'm absolutely calm, because some of you who are new to options are like, oh my God, your short calls are in the money. What happens? Your face is going to melt off. Who cares? So the first thing I tell my members to do is congratulate yourself. Well, why, Whiz? You're losing. You lost $400 on these. No, I didn't. You did. It says minus 400. If you're going to view it like that, you're not going to be successful at trading, period. Why? Because if you view that as losing money, I'm going to point to these deep in the money 80 delta calls and said during that time these have gone up $2,800. How much have you made? Oh, okay, well, $2,400 total. You happy? Yeah. If yes, your answer, welcome aboard. If you go, yeah, but I could have made more, you're not going to be, you're an amateur trader. Professional traders go, I made the 24. I was right that XLF was going to go up, but I was wrong about how much. Who cares? Congratulate yourself. So all we have to do is roll these calls up and out. This looks exactly like what, folks? JP Morgan. Up and out. So I tried to pick a top here, at the 24 strike. I thought we'd keep leveling off. I was wrong. Who cares? Let's roll them. Here's what you do with this tactic. If your front month short calls go in the money, roll them up and out. So I'm going to click close adjust, and I'm going to roll them. I just click roll up and out. So I'm going to roll them up. So I'm buying to close 15 of tomorrow's 24 calls. I'm going to sell to open. Let's go all the way out to that March 3rd and do the 24 and a half. Create order, and you just roll them up and out. Voila. That's how you manage short calls going in the money. Okay? And finally, our new trade for the week, since I didn't get into the SPX one last week, and we're having a nice little pullback here, I am still, with my strategic mindset, cautiously bullish. Okay? I do think this little run here has a little bit to give back. This isn't what I define as a rip your face off rally. It's a nice pop. And what do I do with nice pops? I look at half. What would be half of this? If the market takes a head fake down here and then goes up, it's obviously bullish. If it takes a head fake down here and gets to the half point and keeps going, get out. It's bearish. Okay, well, I'll know before this. I send out a text alert if I'm going to adjust a trade or eject or adjust or whatever. So let's take a look at around the 2230, and I'm also going to go out to the 3 March expiration. Why did I pick 3 March? It's the same expiration as the one who many of you are in right now. So I wouldn't double up this trade, folks. If you have this current one on, you made money. If you closed it out, maybe look at doing this one. But I picked 3 March for a reason. Last week, again, when he said huge tax relief coming in 2 to 3 weeks, market rallied. The danger in this trade is that we pulled the rally forward, and we might be a little ahead of our ski tips. That's the threat to this trade. However, let's just take a look at another bull put spread at about half of what a little bit of a pullback would be. Okay, so let's go the 2230. You know what, 2330. Now, you know what? I'm going to get let's go a little lower. Look at this. Let's do the 2320, 2315. So that even gives us, look at this. Yeah, the 2320. Well, there it is. What was I looking at? 2330. God, I need my glasses when I'm shooting my videos. That it is 2320. Duh. So awesome. I'm going to click add edit legs. And let me just get my ticket ready here and I'll explain it to you. And I'm going a little fast because I know Trader Pub wanted this about 30 minutes, 20 to 30 minutes. So you got to take a test flight, folks. You get into 4 live trade briefs a week that are an hour and a half to 2 hours. And it's nice and slow and we explain everything. This is a little fast and furious. I'm going to sell 15. Why 15? That's me. For 15 contracts, the risk I'm going to show you is in acceptance with my SOP, my standard operating procedure, of the March 3rd 2320s. That's me saying I don't think the market is trading below 2320 by March 3rd. Before expiration, folks, it could. Whiz, what if it goes below 2320? I'm going to hang out unless we're in a free fall, and then I'll adjust. I get it. What if you're completely wrong, Whiz, or something does happen? Russian spy ship gets blown up like Trump said in the press conference today, or, China, something happens and we implode. Well, I should eject from this trade and send out a text alert, but if we wake up and some overnight news it moves the market, I'm long 15 of the 23.15 puts. So the world could go to hell in a handbasket. It'll suck for this trade and for the world, but our losses are stopped out. Okay, now what I'm going to do is I'm going to take a screenshot of this. Why? Because here's the order of events when I do live trading or a video recording like this. I send out a text alert immediately when I see a trade. And you get that within 2 seconds, man. Literally, the text alert takes 2 seconds to get to my cell phone because I look at it. Then I send out an email about 15 minutes after the live trade brief because, I want to stretch my legs. And I send out a screenshot of the trade and the metrics screen, which I'm going to show you in 1 second. And then after about an hour after any live trade brief, it takes about that long to render the recording on my computer and post it to the website. So text alert, email with images, recording. Get it all. Now I'm going to click Analyze, guys, and the first place I want you to look is one place only, and it's a sad face. Why? Why? Because of risk. I want you to always look, even if you don't join us here at TGO, at max potential loss first. Why? Because if you're not okay with potentially losing $5,700, then don't ever look at Mr. Happy Face. Well, hold on. I want to make $1,800 with a 71% probability of making $1,800 in a couple weeks. Damn right. Well, you okay with this? No. Then don't be a retail trader. Professional traders, fighter pilots like myself, always look at the max potential loss first. And if we're not okay with that, change it. Do less. Whiz, that's nuts. I only want to risk $2,500 at most on a trade. Then do 8 contracts or 7. Whiz, I'm swinging some big capital. I don't mind risking 15 grand. Okay, we'll do 35 contracts. What you do on your side of the computer is your own business. I'm not a financial advisor. You're just getting to eavesdrop on what I'm doing. Okay? So, and you should be paper trading until you're comfortable with trading options, and you got to check with one of those people with letters after their name to make sure that options are even suitable for you. Okay? So after you look at this and say, I'm okay. Why am I okay with that? Because one of my SOPs says I don't want to risk more than $5,000, which is 5% of my model portfolio. These are all based on $100,000 portfolios on any one trade. Where'd you get that experience? 25, 26 years of doing this, I don't want to risk more than 5%. Folks, you might be 2%, you might be 10, you might be 50, which would be awful. You have to come up with your own number of, this is my portfolio. I don't want to risk more than this on any one trade so I can live to fight another day. Okay, so this is great. And look at the break even. There's a 72% probability using at the money volatility of at least breaking even. Love it. Good trade. So I'm going to get a screenshot of this because, like I said, it goes out to our members via email in about 15 minutes. And then I'm also going to grab this on the order ticket, and I'm going to send out a text alert. I'll do that after this video, so I'm not taking up your time just showing you how I send out a text alert. It's pretty stupid. One thing I want to cover, though, that I do put in my text alert. I would eject from this trade if it goes up in value, which is bad. Remember, with a credit spread, I want that $1.20, folks. Every day that goes by, I want that to decrease and go into my pocket, the full $1.20. If it's going up in value, I know that sounds good if you're new. It isn't. If this trade is going up from $1.20 to $1.70 to $2, that means the market's rolling over. We want this to go down in price, not up. So in my text, I'm going to put out 2 levels. One is called the adjust level. This is the price at which I take off my oxygen mask in the cockpit and scratch my chin and go, smelling a little smoke in here, and one of my engine fire lights just came on. Uh-oh. Should I adjust my flight path and go make an emergency landing? That's the adjust point. And at this, I'd use $2, okay? That's about 75% of the credit that I take in. If I lose that, it's time to adjust it maybe. How could I adjust it? Well, you'll find out when you become a member and take your 2-week trial. I could roll this down a couple strikes for the March 3rd expiration if I think the market is going to eventually bottom out. If I just think it's a short-term pullback and we need a little time to get airborne again, maybe I roll it out to the next week, maybe March 10th. And the third thing I could potentially do to adjust it is roll it down a couple strikes and out. I guess the fourth thing you could say as far as the adjust is maybe eject. The two prices I put out is an adjust point and now the eject. I simply doubled the credit that I took in, folks. What would that be? 240. If you wake up one day and that trades at 240, that means in your cockpit, both engine fire lights are on. They're smoke in the cockpit, and your wingman's looking at you saying, Whiz, you're on fire, eject. That means get out of the trade, folks, and don't try and save it, okay? Adjust and eject levels. And again, folks, a little fast and furious, what I want you to do right now after you sign up for the SITREP, it's free, go.topgunoptions.com/SITREP. I want you to just go to our homepage. And if you're a skier or if you're familiar with skiing, you'll recognize the symbols here. We have beginner, intermediate, and advanced options trading here, folks. The beginner one is more for, you get access to our accelerated retirement portfolio, a little bit more conservative. Our conservative portfolio returned triple digits last year, folks, 101% return for about 100 grand. So click on the beginner one and take a 2-week trial. The intermediate trial is just that. A little bit middle of the fairway. I know what I'm doing with options, and this is where I trade the front month, February, March, April, and also have trades all the way out to January of 2019. Again, in the beginner one, I have Jan 19 trades on JP Morgan, Apple, Facebook, real good portfolios. And then the advanced, and the only reason it's called advanced, folks, is because we have the weekly options in that track, okay? And it's not necessarily that weekly options are advanced or you have to be a Jedi Master. It's because they're a little shorter term focused. So they require a little bit more love and tenderness. I do a weekly options live trade brief every Monday at 1. And sometimes we're out of those trades in a day. Sometimes we hold them to Friday. Sometimes I don't do any on Monday, and I put out a trade today like a Thursday, and I'm out of it by tomorrow. So pick whichever one is right for you. I think it's $14, $28, and $38. So again, for the price of a average bottle of Pinot Grigio, wait, $28? No, at Costco maybe. You can take a 2-week test flight into one of our services, okay? And this is the intermediate one. You get access to my primary live trade brief, which is every Tuesday, and then the urgent alert service, which I'm filming this video for right now. And then I'll give you access to some of our manuals, primary workbook, intermediate workbook. Hell, folks, if you went to go buy the intermediate workbook on our website, it costs more than this trial. So if you can't recognize that that's a great trade right there in it of itself, don't sign up because you're not gonna do well here at TGO. If you have any questions or concerns, you can shoot us an email, support@topgunoptions.com, or give Annie Santos a call, our client counselor, 754-300-1084, and she can help you pick the track that's right for you. Okay? So again, urgent alert members, I'm gonna render this video. I'm gonna send you a text alert immediately as soon as I get done with this video. Everybody else, go to topgunoptions.com, scroll down, and pick the trial that's right for you, okay? Happy hunting. Make sure you hedge. God bless, and welcome aboard Top Gun Options for all my new Trader Pub friends. We'll see you.